Diving right into sales taxes. So sales tax is a tax on the sale of tangible goods and some services. It's imposed by state and local governments in the US. So understanding sales tax laws is important for businesses to ensure that you're compliant and you avoid penalties. Again, sales taxes are regulated by the state. So you have your sales tax rates, which again vary by state and can also vary by county or city within the state. For example, I'm in Riverside County, California, so I have the California sales tax rate, then I have the Riverside County sales tax rate, and then I have the tax rate of my particular neighborhood in Riverside County. So overall, when you add all of those things up, you're looking at a sales tax rate of almost 9%. Businesses must charge their customers the appropriate sales tax rate based on the location of the sale. So if you are an e-commerce business, there is something called a nexus law, which we'll get into in this next definition here, but look that up because you might not have to charge sales taxes if you are selling to someone outside of your state. I'll give you another example as we move forward when we talk about nexus. So nexus refers to the business's connection or presence in a state. If a business has a nexus in a state, it's required to collect and remit sales tax on sales made in that state. Nexus can be established through physical presence, such as having an office or warehouse in the state, or through economic activity, such as making a certain amount of sales or transactions in the state. So I have an e-commerce business. We are home-based and registered in California. So when I make a sale to somebody in California, so if you go online and you buy something from my website, I have to pay sales tax, or technically you have to pay sales tax on that sale. But if someone from Florida goes onto my website and buys something from my website, they don't have to pay sales tax because my business isn't located or registered in the state of Florida. Some states have a limit. If I remember correctly, Illinois, if you make over $500 in sales in the state of Illinois, you then have to start paying sales taxes. So you need to make sure you're looking that up. Most state websites have a pretty good, guideline on how this works. Moving right along, we have exemption. So some products or services are exempt from sales tax. This is going to include food, prescription drugs, and certain types of clothing. In addition, some businesses may be eligible for exemptions or reduced rates based on their industry or the nature of their business. This is going to be things like nonprofits. They're going to have certain exemptions, religious organizations, but again, there are certain services and products that are exempt. Now we have sales tax filing and payment. So businesses must file sales tax returns with the appropriate state and local tax authority on a regular basis. This is usually monthly, quarterly, or annually, depending on how many sales you're doing. And, if a majority of my sales are in California, I might register my sales tax, monthly, because when you collect the sales tax, you're just holding on to that money and you just have to give it to the state. That's the remittance part. You're collecting it from the customer and giving it to the state. You are not making any money off of that sales tax. You're just collecting it. So the frequency of filing depends on the volume of sales and the state's laws. Here in California, I can do it annually. If for some reason I was collecting an astronomical amount of sales taxes, I don't want to hold on to that money because it's not mine, it's the government's. I'd rather just give it to the government at whatever frequency I choose, because California doesn't really have a guideline on that. They do allow annually, but you can pay more. Businesses must also remit the sales tax collected to the appropriate tax authority by the filing deadline, and you'll have to look up what the deadline is in your state. Penalties and audits. So failure to comply with the sales tax law can result in penalties and interest charges. Businesses may be subject to audits by state or local tax authorities to ensure compliance with sales tax laws. So this is going to be, if you're doing $100,000 in sales and maybe you only paid a couple $1,000s in sales taxes, it's going to raise a red flag, and the government is going to look into your business because they're going to be like, hey, should you have been collecting more sales taxes? If so, where's our money, right? Registering for a sales tax permit is an important step for businesses that sell tangible goods or taxable services in the U.S. A sales permit allows the business to collect and remit sales tax on behalf of the state and local governments. There are two reasons why you should get a sales tax. One, because you're legally required to if you're selling tangible goods or some sort of taxable service. This lets the government know that they should be expecting sales tax from you. But the second reason is if you are doing a business-to-business transaction, and I'll give you an example here. I went to go make t-shirts for my fitness company. I was able to buy those t-shirts from a business, from the manufacturer, and not pay taxes on them. So a sales tax permit allows you to do B2B or business-to-business transactions without me having to pay taxes. And the reason for that is I'm going to be collecting taxes from the consumer. So the state is going to get their money, but they're not going to get it from me because I'm creating the goods, the tangible goods to be sold to a consumer, and the consumer pays the sales tax. So I buy the t-shirts. I don't pay taxes on the t-shirts. I make the t-shirts. The place I make the t-shirts at doesn't charge me tax because it's a business-to-business transaction, and I have that sales permit, or it's also known as a reseller's permit. And then I sell those t-shirts on my website or at the store, and I collect sales taxes from the consumers who purchase the end product. So in order to get a sales tax permit, the first thing you're going to do is determine if your business has a nexus. So before registering for a sales tax permit, businesses must determine if they have nexus in a state. Nexus can be established through physical presence, such as having an office or warehouse in the state, economic activity, such as making a certain amount of sales or transactions in the state, which I talked about in the last slide. Then you're going to gather your required information. Businesses will need to provide information about their business, such as the legal name, the trade name, and business address. In addition, businesses may need to provide information about their products or services, such as their industry classification and the types of goods or services sold. These are NAIC categories. I'm not going to get into that too much because that's more of a business startup topic, but you should know your industry classification. When I completed the reseller's permit in the state of California, for example, I had to let them know what exactly I was going to be selling, and it's just a fillable block. It's not a drop down you have to choose from anything, you just type in what you're doing. But when I got my sales permit in New York and then in Arizona, they actually had those categories. So I had to pick a category. I wasn't a fillable block like it is in California. So once you gather your required information, you're going to actually apply for the sales tax permit. You're going to do this through the state's Department of Revenue or other relevant tax authority. Some states like California and New York, you're going to be applying with the county. The application process again can vary by state, but typically involves filling out an application form and submitting it online or by mail. Most states do it online now, and you literally get it at that very moment. It takes 10 minutes to fill out, and when you're done, they send you the PDF sales permit. Some states, however, may require additional documentation, such as a copy of the business's articles of incorporation, which would be like your LLC paperwork, or a sales tax bond. That's not very common, but it is possible. Then you're going to wait for approval. So once you submit the application, you're going to wait for approval by the state or local tax authority. Again, in some states, this is right away, but if you don't have sufficient information, or if the documents that you uploaded were not registered well by the system, then it might take some time. Once you have your sales permit, you're going to once you submit your application, receive your sales permit, you have to display your sales permit. So if you have a physical, if you're a brick and mortar and you have a storefront, you're going to display this sales permit. If you're an online store, I don't recommend putting your sales permit up. I would just say that if someone requests a copy of your sales permit, then you provide it to them. And it's usually not the consumer. If you're trying to do a business-to-business transaction, the other business might request a copy of your sales permit for their records. So they can show, the tax board, hey, I made this sale and didn't collect tax because it was a business-to-business transaction. And the same goes for you. If you're selling products to another business and you're not going to charge them tax, you need to collect their sales tax permit. You need to validate that. So you need to go to the franchise tax board if you're in California, or the Department of Treasury or Department of State if you're in New York, whatever the state is, whoever's regulating that. You're going to go to their website and you're going to make sure it's valid. If it is valid, then you can go ahead and carry out your business transaction without charging sales tax. So let's talk about calculating and collecting sales taxes. And if you are following along in the textbook, we are on page 23. So calculating and collecting sales taxes is an important part of the sales process for a business that sells tangible goods or taxable services. So when you're calculating your sales tax, the rates are they're gonna vary by state and locality. Again, I broke down California, Riverside County, and then my town. So it's important for businesses to accurately calculate the sales tax on each sale. So if you are running an e-commerce, a lot of website platforms that offer e-commerce services have a built-in software, usually Alvara or some other software that automatically will collect the appropriate sales taxes. And then what they do is they just send you a report at the end of each month or whatever frequency you elect. So the sales tax rate is generally a percentage of the sales price, and the rate may include state, county, and city taxes. Businesses can use online sales tax calculators, like I just mentioned, or consult with their state's Department of Revenue to determine the appropriate sales tax rate for each sale. So I would recommend you start with if you're not going to use a software program, go to your city's website or your town's website, and the city, county, state, so on and so forth, and calculate your appropriate sales taxes. I would not charge more, so don't round the sales tax rate because, again, you aren't supposed to keep any percentage of that sales tax rate. Now you're going to collect the sales tax. So that's, businesses are going to collect sales tax on each sale that is subject to sales tax. Sales tax must be collected at the time of sale and added to the total price paid by the customer. Businesses must then hold the sales tax collected in trust, right? So the state is trusting you to hold this money until it is remitted or handed over to the appropriate state or local tax authority. Next, we have sales tax exemptions. Some products or services may be exempt from sales tax, such as food, prescription drugs, and certain types of clothing. In addition, some businesses may be eligible for exemptions or reduced rates based on the industry or the nature of their business. Again, this is going to be your B2B sales. It's important for businesses to be aware of the sales tax exemptions and to accurately apply them when calculating and collecting sales tax. So if you're not comfortable with this, then I recommend you call your local or state tax office or Department of Revenue and find out, what resources they have to help you understand how you're supposed to collect sales taxes in your respective state. Then you're going to report and remit your sales tax. So businesses must file sales tax returns with the appropriate state and local tax authorities on a regular basis. I mentioned this before, but we'll go through it one more time. The frequency of filing depends on the volume of sales and the state's laws. Businesses must also remit the sales tax collected to the appropriate tax authority by the filing deadline. It's important for businesses to keep accurate records of sales tax collected and paid, as well as any sales tax exemptions or credits.